Okay, so yeah, I think S&P will still have another pullback to back to 4,300 about this level, here. Yeah, this will be a key support of the S&P, whereby the neckline is here. Okay, there's a double bottoms neckline. Okay, breakout and pullback. So it will touch 4330. Okay, if the current bearish trend continue. Let's check the Dow Jones. Okay, Dow Jones also second touch but cannot bring new high. I think guys, you need to understand how to use a Fibonacci tool, right? So whenever you saw a good rally or good fall, it's always good for you to apply the Fibonacci tools. And this is what you're going to see, right? Okay, you can see the 618 level, okay, plus the previous structure here, okay, gives a very good opportunity to sell here. You see, instant about 700 pips, okay, from the 35081 to 34321, okay. This is instant money. Okay, so this is how we actually make our use of the Fibonacci level with the structure together, to to give a very good trading opportunities to sell. All right, and now the lower low was made, right? I think the price may have another pullback back to 3482, and then have another sell from there. Okay, so be aware that I think you don't want to buy the Dow Jones when before the price touched 33,600 level. Okay, I will be only considered to buy the Dow Jones from here. Okay, yeah, I will put a mark here because this is again another 618, right? So as you guys know that I'm the expert of the Fibonacci. Okay, so you can see here, yeah, it's there. 618 33441 would be a good place to buy the US 30. Okay, let's check the euro. Okay, the euro has a deep correction. Now it's already coming back to the 786 level here. Okay, which is 1.0881. So here, what we can do is I'm going to coordinates visibility. Okay, template. Never mind. So the euro will have a. I will consider this as a second try for the bear. Okay, for the bear is going to trying to contest the previous low here. So today is quite important for the euro. If the FOMC meeting minutes are didn't really let the price break down, all right, I think a reversal will come out here. So let's check out the 1 hour chart. All right, we do have a part of a reversal sign from here. This is a good pin bar. Okay, the recent downtrend line was broken, and in fact it's actually a wedge, right? This is what we call a wedge. So the wedge was broken. Okay, you see a strong rally move from here. So now I'm thinking is to make use of this zone to give me a buying opportunities around 1.0888. All right. Okay, so trying to find some price action from 1.0880. Look for a buy to at least 1.0960, and the second target will be 1.1031. Okay, yeah. So the euro will have a bounce from there. Okay, trying to buy from here. All right, this is will be a good trade to buy the euro. The risk reward ratio will be very high. If you understand what I'm talking is, we just want to use this much money to profit of this much money. Okay, so the reward and risk ratio will be about nearly to 8 times. All right, so if you putting a $100 or $200 risk, you are going to probably win about 1,600. Yeah, in the gain. Okay, so let's check the sterling dollar. Okay, sterling dollar also have a dip for yesterday, and wedge was broken. Okay, the first wave up. Okay, second wave down. 618 was touched. So yep, it's okay to buy the sterling at the 1.3069 level. I think the target will be 1.3160 at least. Uh, let's check the 4-hour chart. Okay, 4-hour chart, the sterling has make a big triangle in this stage. All right. Okay. So just waiting for the breakout to happen. All right. Personally, I think it's going up. Yeah. What I'm feeling is going up. Okay. The sterling we're going back to 1.3540. Okay. Because the study has been forward for almost 1 year, right? Since 1.42. Okay, I think last time when I said after breakout this level, okay, we want to sell the sterling, break out this level and sell the sterling, right? Okay, so now we can see that yeah, I think the correction was almost done. uh, the daily chart, okay, this is a very long-term downtrend channel. Okay, very long-term downtrend channel. All right, so weekly chart shows the major support comes from here. Right, there's a support demand zone is here. Right, so it's good to buy or trying to create some position to buy the sterling. And for the sterling Aussie, what I would say, yeah, it's a perfect time to buy sterling Aussie. Okay. Okay. Because the recent four has already fit about for 2,000 pips. Okay, from 1.92 to 1.31. Okay, so it's 2,000 pips without a correction. All right, so this is a crazy move. It just means the Aussie is going up, however, the sterling is going down, and I think we call the divergence will coming back to going back to the neutral price. Okay, so sterling dollar we are going up and Aussie we are going down. Okay, it's too hard for the sterling dollar to continue going down. So in 1 hour chart, we can find a very good reversal comes here. Okay, it's a good reversal comes here. All right, a beautiful reversal pattern here, and the whole bottom is a flat bottom. This is what we call flat bottom, right? Because the bottom was flat. Okay, or U shape, right? You want to call this a U shaped bottom here. Okay, so whenever there's a pullback, okay, just to go to buy the sterling Aussie, and I'm quite pretty sure the sterling Aussie will at least minimum going back to 1.81, about 800 pips. This is the first target. All right, the second target will become 1.87, which is here. Okay, this is the second target. All right, so and maybe in weekly chart the sterling Aussie will going back to retest $2, just like what it did here. Okay, so whenever the sterling have a very quick fall or very long-term move, right, it will actually going up. Okay, it will come back. So 1 hour chart, just waiting for the price to come back to 1.73. All right, so this is our quite precise trade. Okay, we want to buy from 1.73. We want to put our stop loss below 1.7250. So just risking this much, okay, to fighting the sterling Aussie going up all the way. Okay, so sterling Aussie going up, of course, the Aussie is going down, right? I think last time I said the Aussie has a target at 0.76, and it really hurt. Okay, it really comes here, right? Okay, so this is a quite good, fantastic analysis that we bought the Aussie from here, 0.71, instantly give us 500 pips from our last webinar. So I think the Aussie is okay to sell because the 618 was touched. Okay, yeah, we want to sell the Aussie. Sell the Aussie to 0.70 and to 0.65. Okay, because the dollar is increasing rate, I think the Aussie have another fall. And same for the kiwi. Kiwi becomes weak. Has a long pin bar here, right? So yesterday the kiwi has a good shooting star or pin bar, retesting the previous resistance here, 0.7030. Okay, so we want to take a reversal trade of the kiwi to sell back to at least 0.67 to here. Let's check the dollar Canadian. Okay, dollar Canadian has a good pin bar as here as well, 1.24. Okay, I think our shorting target for the dollar Canadian was hit. Okay, 1.24. So now the price is coming back again. I think we want to use the Fibonacci tools again, so that you can understand. Yeah, 1.27. Right. The pullback may come back to 1.27 and before it comes down again. Okay, but long term wise, I would think the dollar Canadian is still ranging. Okay, still ranging, waiting for a direction. But the triangle was broken. All right, so I want you guys to sell the pullback. Okay, so pullback to 1.27, sell the pullback of dollar Canadian. Yeah, because oil is at a 100 level or 99. So, but the Canadian dollar didn't really appreciate along with the oil price. So that is not in the makes sense. Okay, because we know that the Canadian dollar moves along with the oil price. So when the oil price rally, the Canadian dollar will rally, and the dollar Canadian will drop. Right. So just to wait for the market to prove itself. Okay, I think the dollar Canadian will going down in the long term run. Okay, let's check the dollar yen. Okay, dollar yen has a very strong rally last week, right? After this wedge, after this breakout, okay, just instant rallied for about 700 pips. Okay, 116 to 124, right? 900 pips. All right, it's crazy move for the dollar yen. However, yeah, it's getting some quite strange here because nothing. Okay, the Japan government did nothing. It's just due to the yield difference push the dollar yen to such a high level. But in weekly chart, we can see that it just touched the all-time high. Okay, in the year 2015. Okay, 2015. That is something happened after the dollar yen. Makes it also a huge move. Okay, huge move of dollar yen. Okay, and it just make a reversal at 125.